So these are the China stock market. Okay, so how did they perform in the past few years? Okay, let me show you the the data. Okay, and of course we try to look at big picture first. Okay, overall all the market we call MSCI China. Okay, and you can actually buy this ETF 2801. Right, 2801 measure tracking MSCI China, which is the A share, H share, and even ABL is included. Okay, later I show the underlying what are the number of holdings they have in this ETF. Okay, and you can see that if you measure overall China market movement, right, it's not really to give you very good performance in the past probably 2 years. Okay, from the peak to the bottom, okay, it took this index about 21 bar. Okay, I think it's about 637 days. Okay, it's about 2 years period for the index to drop 60%. Okay, so overall market, China market dropped by 60% in the past 2 years, average 30% per year for entire China market. Okay, that is very bad, right? 30% drop every year, okay, for the past 2 years. Okay, and now it reached a level is probably like in 2016 level account range, okay, for the China market. Okay, but if you look at the past 2 weeks, right, the past 17 days, okay, it looks like a very small recovery, right, because this is a very drop out chart, right, but this is actually 17 days, okay, meaning for the past 2.5 weeks, right, China market recovered 20%, okay, 20% recovery in 2 weeks. That is about 10% recovery in a week, right? So definitely it's a good recovery, but it's still very low as compared to overall long history. Okay, so that's big picture. Okay, and then we look at a narrower focus. Okay, and this is just purely A share. Okay, top 300 company listed on Shanghai Stock Exchange and Shenzhen Stock Exchange. Right, there's the ETF tracking 2846. Okay, A share actually not that bad, although it's not very good. Okay, dropped by 40%. Okay, in the past 2 years as well. Okay, not as bad as compared to overall China market. Okay, and you can probably say that A share outperformed the general China market. All right, but it's still down by 20% a year. All right, and the recovery also not as much as compared to general China market. Okay, because this is just purely focused on onshore market, right? About 10% in 2 weeks, right? But still very low. I mean, if you look at long-term trend line, currently CSI trend line is sitting at the lower end of this trend line. Okay, and of course something we are more familiar. Okay, is a tracker fund of Hong Kong 2800, right? And this is probably one of the worst one that you can see in the index performance. If I just measure over the past 2 years, right, Hong Kong market dropped 50% in the past 2 years. Okay, but if you look at past 5 years, right, it actually dropped from even higher point, right, to here. Okay, I don't know how many percent, probably 70 or 80% in the past 5 years, right? So Hong Kong market actually every single year drop. Okay, over the past 5 years, every single year drop, and it reached out to a certain level that is probably near to 2008, 2009 global financial crisis period. Okay, that is how bad is the Hong Kong market. All right, so so Hang Seng Index is actually worse than onshore market. All right, but recovery also better. Okay, because when you see something drop further, it rebound better. Okay, it's like you throw a ball stronger to hit the ground, right? The rebound also stronger. Okay, so it actually recovered 22% in 2 weeks time. Okay, 22% in 2 weeks time for Hang Seng Index. Okay, and if you look at pure tech company, if you are someone that just focus on pure tech company, it's even worse. Right, 70% drop in less than 2 years. 70% drop. Okay, this is pure tech. Okay, this one inside got Alibaba, got Tencent, got Meituan. Okay, it's even worse than Hang Seng because Hang Seng still have some form of banks. All right, Chinese bank, or even HSBC, Stanchart, right? Also drop, but not as bad as compared to tech company, right? So pure tech company like this 3067 dropped 70% in 2 years. Okay, and again, those that drop faster rebound also faster. All right, Hang Seng Tech Index rebounded 32% in about 2.5 weeks. Right, but it's only a small recovery. Right, it's still a long way to go to hit to back to pre-COVID period. Right, I think tech company not only affected by zero COVID policy. Right, there are some crackdown here and there, and also rising interest rate. Okay, definitely affect tech stocks valuation. Okay, yeah. So this is the worst. All right, but also the rebound is faster. Okay, yeah. So it's about high risk, high return. I mean, if you look at this, definitely. I mean, nobody actually predicted that this happened. All right, and probably you may feel that it is higher risk to just concentrate into pure China or even pure Chinese tech company, right? But when you see the rebound, it actually rebound even higher. Okay, so high risk, high return. Okay, high drop, high recovery, right? But the risk is higher as well. Okay, yeah. So these are the major indexes that you can look at. Okay, so what is happening? Okay, but before that, here I'm going to show you the comparison. Okay, yeah, the one with wider range. Okay, MSCI China, of course, is somewhere in between because that's overall market. Okay, onshore. Okay, onshore market 2846 performed the best. Okay, although it's still negative, but it's still outperforming the best. All right, and then Hang Seng is here. All right, and then Tech is the lowest. Okay, so this is over the past 1 year. Okay, everything dropped, right? But A share dropped lesser as compared to other index. Okay,